While we love market share, we want to grow the market, right? That is the biggest thing that's our main focus is how do we take this category and get it into that mainstream position.
Welcome to Powerhouse, where we interview the biggest names in housing and ask them about their strategy for growth. I'm Diego Sanchez, president of HousingWire, and my guest today is a special one. It's Kristen Seifert, president of Finance of America. Kristen, it's so great to have you on the show.
I'm so happy to be here, Diego. Thank you for having me.
So, really excited about our conversation today. You're now 3 years into this focus on reverse mortgage at Finance of America. What have been the highlights and the lowlights of this focus?
3 years, that's a long time. It's kind of flown by. It's interesting. I would say from a highlight perspective, having the focus and really this kind of shared mission and vision amongst the entire team is so powerful. I mean, you lead a company when you have a shared mission, it just paves the way for a lot of great innovation, ideas, collaboration across the company. And, without that focus, it's sometimes hard to know how to prioritize things, what's most important on any given day. So that focus has been a real blessing, I think, for the company. I think generally the team that we've curated is just second to none. I couldn't be more thrilled for the team that we get to work with. I mean, from everybody within the kind of operating company to our board of directors, which really has been elevated recently to help us on our mission and towards our cause. And then on top of that, we just have the best capital markets team, I think, ever in reverse mortgages. And so we've really been able to do things because we have all of these really smart people focused on the same thing. Before this pivot, we had all of this talent, but everybody was kind of doing 10 different things all the time. So now with all of the focus shared, we're starting to have breakthrough moments a lot more often and doing things that I just don't think we would have done in the past. So those are highlights. Obviously, the difference that we get to make for the clients that we serve, the impact that we get to make, and just seeing that every day is just such a great thing as a leader, right? That our team gets to make an impact for people in really meaningful ways. And so that's another thing that everybody really believes deeply in. Lowlights, we like to call them opportunities, more so than lowlights. I would say over the past 3 years, merging the different cultures was a lot harder than I expected. I love leadership. I love culture. I love building teams. I didn't realize the complexity, especially being virtual, bringing disparate cultures together and, really getting everybody from operating kind of in their silos of where they came from to no, we're this one company and we've got this shared mission. It's so great to be on the other side of that. That was just a lot harder than I expected, and it took a bit longer than I expected. Our team had been together for a very long time. And so while most of our team was virtual even before the pandemic, many of us had worked together for a decade. So we've seen each other, we've built those relationships, we've gone through the stresses together. But then, acquiring AAG, merging our holding company in, everybody just had a kind of a different way of working. And so, getting us all on the same page was a necessary part of the process, and it took a bit longer. What other challenges? I think there was just a lot of foundational items that aren't the things you necessarily want to work on, but have to be worked on. And so, a lot of the time was spent getting our foundation stronger so that we could really get to the point where we can do things to achieve that breakthrough velocity. And I think we've really set ourselves up for that and are looking forward to 2026 because of it.
It's super interesting, and I appreciate you being so candid. The AAG acquisition seems like a very important part of your journey and your strategy for growth. Does M&A continue to be top of mind for you, or you're like, I've had enough of that, let's focus on what we've got right now?
I think M&A is definitely in our DNA. And so if there are opportunities out there that make sense, we always want to take a look at them. So, you know, there's, I just, there's always stuff that we want to look at. And I think if it helps our mission and helps us get to our mission and our goals of like really bringing home equity for retirement into the mainstream, um, more realistic, then absolutely we would be interested. So I would say that's an always on conversation. But at the
But I
same
imagine
time,
you're
our industry is really small. So, right, the
yeah,
opportunities
right.
can be limited.
Right. So I imagine that focus on M&A would have to be like a home equity and reverse mortgage focus, right? Like you're not going back to doing forward mortgages again.
Yeah, so this time I think the focus is anything that really makes sense with the demographic that we're serving. And
Got it.
obviously, doing right now, we've learned that having less distractions is better to help us do the things that we want to do easier, right? But I think over time, 100% the first and biggest focus would be within our space, in our category. But I think that we're always asking ourselves, are there ancillary like services or things that should be part of our ecosystem to serve our demographic that makes sense? And it may not be M&A, maybe it's partnerships or things like that. But yeah, we are 100% committed to this demographic and home equity for retirement. So we're always looking at things now through that lens.
We'll talk more about partnerships later in the conversation, but you've brought up mission probably 4 or 5 times now. What is the mission of Finance of America?
So, we believe strongly that we can help people thrive and have a more joyful retirement. And, when you think about all of the kind of macro factors impacting what retirements are going to look like, I mean, you're kind of starting to see it right now, but think 10, 20 years down the line, home equity has to be part of the conversation, right? Pensions are pretty much gone. You look at people's retirement savings. We've been really fortunate that the stock market's performed so well, but that's
Mm.
not always the case. And many people just aren't invested in the stock market. So it's almost like you have this tale of two cities, right? Where you see all the headlines that things are amazing and your 401k assets are growing like crazy. But there's a huge subset of Americans that don't have much in their 401k savings. So when you're thinking that you might make it or get by on just Social Security and a limited retire or 401k, that's probably not going to help you make ends meet for, it would be one thing if retirement was 5, 10 years. But what we're seeing is retirement is a lot longer than what people actually plan for. And there's a lot of unexpected things that come up that people also don't plan for. And the interesting thing, even with the labor market, is we're seeing a lot of people forced into retirement before they thought they'd need to be in retirement, right? And so if that accelerates, what are people's options? And home equity for people 60 and over is a $14 trillion asset. So, I think it's just a matter of time as we continue to educate people on the power of home equity, how to use it responsibly, sustainably, which is really important, right? Because the industry's done a ton of work over the last decade to move itself out of this kind of negative headline cycle into something that people are seeing as a positive strategy that can help them live the retirement that they want to live.
I feel like you just stated the thesis for why HousingWire bought Reverse Mortgage Daily 4.5 years ago. That reverse mortgages would become a mainstream and common part of retirement planning. I don't think we're there just yet. What do you think that timing looks like where financial advisors, wealth managers are just recommending it as a regular part of retirement planning?
Yeah, we have a lot of work to do still. And I think the biggest kind of gap is education, right? The question we ask ourselves daily is how do we educate people at scale? And, I think about even little things like HousingWire bought Reverse Mortgage Daily, but the Reverse Mortgage Daily content is still in this RMD ecosystem. So the people that we need to break through to, traditional loan officers, mortgage bankers, financial advisors, et cetera. But on the mortgage side, the traditional folks may not even be seeing the stuff going on in reverse because I think you have to have a separate subscription maybe to get that content, right? So it's like, how do we bring these things together so that this is just, you got, HousingWire talks about cash out refinances or new home purchases or whatever it may be. How does reverse be part of that main part of the conversation and not a side conversation? I mean, that's one piece of it. We just have to do a better job too of getting the word out there from a PR standpoint. Now that we're a public company, we're really figuring out how do we get even an investor relations story stronger out there. Because when you look again at all of the stats and the macro influences, I mean, it's just such an incredible opportunity for so many people. And education really is the biggest barrier for people being open to even considering the product, because there's still a lot of misconceptions.
Yeah, and like it seems like HousingWire might have some education work to do as well. It is not a separate subscription.
Okay, good.
It is a separate newsletter to get reverse mortgage content, but we do try to integrate reverse mortgage content into other newsletters as well. So yeah, no, I agree that education is tremendously important. And getting in touch with the forward mortgage loan originator and branch manager and production leader seems like a huge part of this. Do you think it's possible for a forward LO to add reverse to their product set, or does reverse require specialist LOs?
I mean, there's a lot of different schools of thought on that topic, and then there's just a lot of nuances too. I would say absolutely traditional loan officers should understand reverse mortgages well enough to have the conversation, right? It's a disservice to your client base. There's just such a big opportunity there. So I think every loan officer should understand how it works, whether or not it's them that actually does the origination and the processing and the hand holding, or they hand it off to a more expert person on their team. There are nuances and challenges because of how you pay your loan officers, and you can't pay differently per product. And so a lot of companies have challenges because the compensation structures can be vastly different on reverse and forward. So a lot of times they take a step back and say, well, we actually need it to be handled over here. These people can be paid X, these people need to be paid Y. So that's just part of the challenge that we've got to figure out and work through. It's interesting too. I mean, we've launched our second lien reverse product, and that product is one that we think has so much potential. And it's one that I would love to get more originators talking to their clients about, because we're making some improvements to that product this week to raise the LTVs by 5% across the board on that product. And we recently reduced the interest rates on that product. So if you're 55 or older and you're considering a HELOC, for example, when you look at the stats, there's a huge percentage of people that are being denied for HELOCs because of their debt to income, right? If you can't afford another payment, they're not going to give you the loan. And then even the people that can afford it, if they saw our product next to a HELOC and said, oh, I could get almost the same rate and I can get access to the funds I need, and my payment in theory is optional, right? If I want to make a payment like a traditional HELOC, there's no penalty in doing so. And if I don't want to make a payment, then I don't have to. I mean, it just seems like such an elegant solution for people. And then it also paves the way for a number of people to qualify that with the traditional HELOC couldn't. We're working with a client right now, and we looked at their HELOC denials for the last 6 months. And I think the number was 45% of those denials qualified for our product, right?
That's huge.
The people that were age qualified, that cohort. So I just think it's such an untapped opportunity. We're starting to work with some of the larger servicers to talk to them about how do we use this product to help their portfolio of borrowers. But I really think it's an opportunity for the originators to stay front and center with their borrowers, because it should be them that comes to them with these types of solutions.
Well, especially in a low origination market.
Yeah.
you need opportunity like this.
It's interesting because we always said, like, if the traditional mortgage space ever calms down, we think, loan originators will want to learn more about this product. And it actually hasn't happened to the scale that we thought. And so that's kind of like what we want to figure out is why is that? And how can we help change that?
Yeah, I would guess that some of it is partnering with forward
Yeah.
mortgage originators and servicers. It sounds like you partner with as well. How do you set up partnerships with forward mortgage companies?
We have thrived in wholesale since our inception. I mean, we really started as a wholesale reverse mortgage lender. And so that is such a core part of our kind of skill set and where we really perform well. And right now, it's what we're seeing, and what I love seeing is you've got these bigger companies that are starting to hire specific leaders to come in and help their reverse mortgage effort. So you look at companies like CCM or Rate, right? They've all brought in kind of reverse mortgage executives that came from our space that can now help educate within the company. Because while people say they want to do it, there is a learning curve. There are things that are going to happen day to day. And us as an outsider, it's hard to kind of keep the foot on the gas sometimes when different things are coming in and out of the system. So what we've seen the most success is these companies that are bringing on executives, making it a pillar of their strategy, right? Because it really does need to come from the top. We've had a great success grassroots. Loan officers want to offer this. They work for whatever company, and they do that book of business. But when the leaders of these bigger companies say, like, this should be part of what we offer, we want to offer customers solutions from the time they buy their first house till the time that they can't do loans anymore. This needs to be part of that dialogue. And so it's really exciting to see these bigger companies starting to invest in that way, because I think that's going to make the biggest difference. As far as how we support them, I mean, we have so much material, education. We'd be on their doorstep tomorrow if they wanted us to be. So, I think that piece is the easy piece for us once the interest is there.
Well, we do have a lot of IMB executives in the audience for Powerhouse. What's the best way for them to get in touch with you and your team to talk more about a partnership?
I mean, I don't know. I'm sure we have a wholesale email that I could share, but I don't know what it is offhand. But if you go to our website, foa.com, there's a partner option there, and that'll bring you into the ecosystem. But, John Scarpati is our chief production officer. He knows most of the people out in that space. I mean, we want nothing more than to support people if they want to be on this journey with us.
Perfect. All right. So HousingWire recently reported that proprietary reverse mortgages were up to 40% of reverse origination in September. And so that's been climbing for a while now. What is happening with proprietary products to trigger that growth?
It's been an interesting dynamic in the rising rate environment, right? The reverse category isn't as impacted by rising rates as traditional mortgages because there isn't a payment, but the LTV does get impacted on the HECM side, the government product side. As the interest rate climbs, that LTV declines. The other dynamic with the HECM product is borrowers are paying a 2% MIP, mortgage insurance premium, to the government on their loans. And that mortgage insurance 2% fee is tied to your home value, basically, your max claim amount. And so, as we've seen, home prices stay pretty steady, and then the LTVs are coming down a bit. It's kind of a big fee for borrowers to swallow sometimes, to pay that MIP when like the proceeds to them is less. So I think that's taken a little bit of a toll on the HECM side. And I think that will just naturally correct over time as rates kind of stabilize. At the same time, there's just been a lot of innovation on the proprietary side. There's a lot more flavors of proprietary products. And then the biggest factor is proprietary products mostly are built for that more jumbo sized home value. So the balances on those loans are just going to naturally be bigger than the balances on a government loan. And so I think that plays a part in it as well. And now, I mean, I think most of the big lenders in our space are offering some flavor of a proprietary product. We rolled out our Home Safe Suite, gosh, I think like 5 or 6 years before anyone else was doing it. But now that more people are offering products, it's just more easily available across the category.
And are your proprietary products just available to your sales team, or do you wholesale them as well?
Oh, definitely everybody. And yeah, our wholesale channel is so critical when it comes to our proprietary products. And we've recently introduced a way for those partners to white label the solutions, right? So if they want to offer these products under their company name, under, not our Home Safe brand, they now have the ability to do so. And I think that'll be a big game changer as well, because if you are a bigger IMB, right, you don't want to go out and sell Finance of America's Home Safe product. You want to sell CCM's, whatever you want to call it, product, right? And so having that white label option available, I think is a huge lift for some of these larger companies, asking if it makes sense to offer those products or not. And then I think the biggest thing, again, just going back to our Home Safe Second product, that there's so much opportunity there. We, again, think that the opportunity for our wholesale partners there is much greater than we've seen so far. And I really think the opportunity is for those folks that actually haven't adopted reverse yet, because it's just a lot of people looking at ways to access their home equity. And I think this is the most elegant solution in the marketplace.
And is that Home Safe Second, is that for 65 plus, 60 plus, 55 plus?
55 plus.
Okay.
Yeah.
So you're expanding that age range a little bit.
Yeah. Yeah. And that's the product where I mentioned that we're lifting the LTVs 5% across the board this week, which is a really big change. And I mean, you can get our products at the same cost as some of the very mainstream HELOC products out in the market today. So, I think there's a lot of compelling reasons to give that product a look.
So HousingWire also recently reported on a partnership between Finance of America and Better Mortgage. Can you tell us more about that partnership?
Yeah, we're really excited. I mean, when we ask the question, like, how do we get greater adoption and greater awareness, right? There is this education component, but there's also a technology component where, people sell what they know, but they also sell what's in their systems. And borrowers buy what's in front of them. And so with Better, we just thought it made so much sense because, as they're expanding their technology offering, right, as more people start using the Tin Man platform to originate loans, to originate HELOCs, the ideal outcome is that if a borrower goes online and wants to get a HELOC, they put in their information, and if they're age qualified, then they see a traditional HELOC, the traditional HELoan, and a reverse mortgage HELOC option, right? Like that should just be all in one place. Why does a borrower have to know, oh, I need to go look over here for this other option? And so we really believe deeply that if a borrower was able to see all three options next to each other and then choose which one is best for them, many times it would be the one that doesn't require a payment that's priced very similarly to the ones that do. And so this opportunity with Better just made a lot of sense from us because we think that access piece is really a limiting factor in scaling the category. So we're in the very early stages of that relationship, and the industry's never really succeeded in getting our products in big forward platforms. So I think this will be a huge test case for us, and we expect to see a really big lift once those products are all in the same engine.
Yeah, I would imagine a very compelling case study can come out of this once people are able to actually see those products side by side. All right, so there are unfortunately very few women in C-suite roles at large mortgage lenders like Finance of America. What was your path to the C-suite, and how do we get more women on that path?
Yeah, I mean, that's a great question. My path seems like very accidental, and then just also very lucky in a sense. When I graduated college, I had no thoughts about entering the reverse mortgage industry. One of my best friends from high school landed at a company called Financial Freedom, which was later purchased by IndyMac. And she's like, come work here with me for the summer while you figure out what you want to do. And I thought maybe I'd go to law school. I didn't know what I was going to do at that point in life. So I took her up on the offer. I went to work there, and it's a really niche industry. And so, she and I both were able to climb the ladder pretty quickly. And the interesting thing about that time was my grandfather, who'd been my biggest mentor, he just didn't like the reverse mortgage category at all. So he was not supportive of this career choice. But as I started to climb the ladder, and once I reached a certain point, I realized a lot of the things that were wrong with the industry were in our control to fix. And so that kind of became a mission that I had, like, how do we make this better? How do we take someone like my grandfather and turn him into a believer? Because there's so much good that can come from this product and from this category if done the right way. So that, I think, having that kind of like mission driven piece within me, just, it kind of felt like I was on a track that I don't know. It felt very aligned to being able to make an impact. I've always told people, like, if you want to climb the ladder, always do more than you're paid for, right? Don't wait to be paid more and then do the more, just like do the more. And I've been fortunate that for me, that's worked out. It obviously doesn't always work out. And there have been moments in my career where, I wonder, would I have gotten to a different place at a different point, under different circumstances? I don't know. I think I feel very grateful. I've worked for a lot of men that never saw my gender, and I am really grateful for that. And, I think when you care about leading a team, when you care about building a good company that's a sustainable company, and, when you do so in a way that, people can rally around, that's just a really big key to that success. How do we get more women? It's, that's a great question. It's hard to break through the ranks, and
well, it sounds like, do more than your job description.
yes.
Sounds like really good advice. Fix problems. I mean, fixing problems is tremendously important. And then, you probably need to interview your potential managers as much as they're interviewing you, to understand what they're like in terms of giving people opportunity.
Right. Like, are you at a place where that next step is possible for you? And I think the other piece, which really has played a huge part in my career growth, is every time something's gotten really hard and it would be really easy to walk away or to blame somebody, I go do work, right? Whether it be a solo meditation retreat for a week or hiring a personal coach, every year there is some sort of work I do on me personally, because ultimately it comes down to me and how I show up. And so I just think that investing in yourself has to be a priority. It just has to be something that you're willing to do. And every time I feel like pointing the finger, it's like, okay, look in the mirror and see how you could have handled this differently, because I can't control what anyone else is doing, but I absolutely can control how I'm reacting, how I'm responding, how I'm showing up, how I'm leading the team through, a stressful moment. And so I think that's just a really critical part for not just women, for anyone that wants to climb the ranks.
Yeah, I love that. All right, so let's wrap with growth strategy. How are you thinking about growth and taking market share in 2026 and beyond?
Yeah, I mean, for us, it's not really, while we love market share, we want to grow the market, right? That is the biggest thing that's our main focus, is how do we take this category and get it into that mainstream position that you and I talked about earlier. We've got a lot of different strategies that are kind of in the works for 2026, ways that we think that we can do that. Then in concert with that, we're really focused on getting people educated on the power of the Home Safe Second Lien product, right? Like getting the traditional mortgage folks to offer this product as part of the conversations they're having daily, having larger servicers, mid-sized servicers use this as a portfolio retention strategy. So those are a lot of blocking and tackling things, but I really think for our industry, our category to do what it can do, we've got to break through the mainstream dialogue. It's going to come down to, different ways of marketing, different investments on the PR side. And those things we're really, really excited about going into 2026.
So growing the pie, it's all about education and promoting yourself and promoting these great products and helping them live side by side with Ford Mortgage products.
Yes, absolutely.
Well, Kristen, thank you so much for joining me today. I think this has been a wonderful conversation.
Thanks for having me, Diego, and I hope to be back soon.